You made $1 million in a year and you're 26 years old.
It is insane, but it is exactly how my vision said it. It's never about indicators or golden strategies. It's not even ever about charts.
Like, are you like a master of apex moments?
Check the time that it got halted at 10:21, and then you add 5 minutes to that. That is the time to buy, because that means that, and then check that out, made like $5,000 on that second. It was either this or I was gonna die trying.
Today we are talking with MightyStocks, who went from trading on a laptop in his bedroom in El Salvador to being invited to the floor at the New York Stock Exchange. He started out with a 3K account, blew it, but over the last 3 years, he's racked up 1.5 million in profits, all third-party verified on Kinfo. We're going to be diving into his profit curve and looking specifically at his signature long dip and rip strategy. And for that, I know you guys like value. I say it in the comments. We're going to look at when he gets in, when he gets out. He's going to be running us through an entire video. And other than that, just getting to know the man behind MightyStocks. So for those who don't know anything about you, how would you introduce yourself?
Perfect. Thank you, Steven. Well, a brief summary of who I am. I am a small cap momentum day trader. Started day trading during the pandemic like everybody else. Had a lot of struggles. Was one of the guys that didn't really get it at first. Took me 3 years of absolute pain and failure. Turned the corner at the end of 2022. And I've been living from the markets ever since. Trying to grow my accounts, trying to increase my share list and take a little more risk.
Man, it's absolutely crazy. So I mean, you're in El Salvador. You started in your bedroom, 3K account. Can you just walk us through kind of the start and what happened there?
Yeah, for sure. So, long story short, I was an immigrant for a large portion of my life. When I was a teenager, I was sent by my parents to Canada and try to find a better future for myself. In there, I was with a hustler's mentality. I was in this mission of trying to become successful. Didn't matter the cost. And within that drive, of course, I was looking for side hustles, things that I can make money from, things that I can flip, businesses that I could start. Whatever was the hot side hustle at the time, I was on it, trying to make a name for myself, trying to make, something out of this mission. I was sent as a teenager away from my family. I was focused. I had to make it work. I had to essentially live my American dream, my Canadian dream, whatever it was, right? So looking on YouTube like everybody else, how to get rich. Of course, day trading is one of the most popular, business ventures to pursue. And during the pandemic, everybody was stuck at home and, it became very popular to start trying to trade. Of course, I started seeing people like Ross Cameron, Ricky Gutierrez, Tim Sykes, all these guys saying that they're making $10,000 each day, $15,000 per day. And of course, somebody that has a negative net worth and try to become someone, I was hypnotized by it, and I wanted to learn what it was. So at the same time, I was also going to school. I graduated with a finance major a few years ago, and I was also learning about investing and how to find stocks, not to trade, but how to find good companies and well-versed portfolios so you can put some savings aside and start building your capital for your retirement, how to diversify portfolios, all that good stuff. And from there, my algorithm literally started flooding with day trading videos, how to make money in the markets, how to make money in the financial markets, how to find stocks to trade, where to buy, where to sell, which are the best patterns, all that. And something I'll admit was I was a course buyer from the beginning. I'm a big believer in education. I knew that most information is free out there, but again, I wanted to shorten my learning curve, and I was doing pretty much whatever it took for me to become a consistent trader. So I joined Ricky Gutierrez's course at the beginning. I started doing a little swing trading, a little ETF trading like he used to do back in the day. That wasn't quite successful. I, lost some of the savings I had. I was trading in Robinhood with like $100 cash account, so it wasn't that big of a deal. Then I found Ross, and I wanted to be like Ross, and I wanted to trade small cap momentum stocks, these magic stocks that are going up hundreds of % each day. So I went ahead and told myself, I am better than everybody else. I will be one of the ones that get it instantly. So I took all the savings I had, which was $3,000 at the time. I went ahead offshore because, of course, nobody has $25,000 to fund an account over PDT. So I'm like, here I come, bro. I'm going to grow this small account into $1 million in a few months. Watch me do it. And of course, like everybody else, I very quickly blew that account. And that's the moment in which most traders quit trading forever. You try to get rich quick. You don't follow any methodical strategies or blueprints, but instead you try to be a hero. You blow it all at once, and you're out of the market, discouraged forever. And I also genuinely believe that's why the statistics of successful traders is so awful, because most people quit after month 3 or after their first red trade or after their first awful experience. So that's where I should have and that's what I should have and could have quit trading forever after I blew $3,000, which was everything I had. But instead, I decided to go back into the simulator. And I was in a simulator for literally like 2 years, practicing, trying to learn about strategy, trying to try different setups, different indicators, all that fun stuff. I've always had a process over profits mindset. I've lived my life focused on delayed gratification. I really wasn't focused on trying to get rich today. I wasn't focused on trying to find instant reward, but instead I knew that if I could become profitable in a simulator, I would be able to turn it around and start doing it with low risk with a small account, and then eventually grow that account. So I was, it didn't matter how many years it took. I was going to be in it forever. One of the ones that, die trying type guys. So if I was committed already, might as well take the right steps. Anyways, became profitable in the simulator finally, and that's when I transitioned into a real account. This time around, I needed to trade in a free commission account because the strategy I became profitable in was very high frequency, taking hundreds, if not thousands of trades in a single day. Pretty much trading like a market maker, like trying to make money off the spread, trying to make money out of the micro moves within the small cap momentum stocks, buying the bids, selling the ask, trying to recycle shares, all that, right? Which meant I'm playing like a market maker, but now I have to pay insane commissions on offshore brokers, which makes me a losing trader at the end of the entire transaction. So I was like, all right, well, I got to go and trade in a free commission broker. And free commission was becoming very popular, and most brokers in the US were like undercutting each other, and all of them went to zero. But now I need to save $25,000, and I'm still a nobody immigrant in the middle of nowhere in Canada, because my immigration program was, if you're willing to live in North Canada in a town that only has one stoplight and 1,000 people living in it, you one day can become a resident. So I was living in the middle of nowhere, going to school, painting houses, trying to save for this damn $25,000. And after doing 2 years of trading in the simulator and working my ass off to save $25,000, I didn't save $25,000. I actually only saved $9,000. But I had so much experience already in the simulator, and I was so confident in my metrics. I remember hitting like 6 months in a row of profitability in the simulator. I felt like, I didn't want to wait another 2.5 years to save another $15,000 at my painting houses rate, right? So I reached out to a cousin of mine that's an entrepreneur. He lives in the US, similar story, immigrant that goes from nothing to from zero to hero. He was very successful, and I shared with him my vision and the delusion I had of me becoming a rich trader guy. He saw the vision, and he loaned me $15,000, which was what I needed to go over PDT, right? Of course, we had a deal in which I had to repay him no matter what. I was going to give him this much interest. I was never going to touch his capital. I just needed to be above PDT so that I could day trade freely. If anything, all my losses were going to come from my $9,000, so on and so forth. So the deal, was risky because I'm trading stocks, and 9 out of 10 people fail, and it's incredibly risky, all that. But I was never really going to touch his money. I just needed to have the ability to day trade freely. Anyways, gives me the money, and then I go into the live markets with a $25,000 account. But and I'll show you here on my Kinfo equity curve, unlike everybody else, I continued with my mindset of delayed gratification, process over profits. This is where I either try to be a hero again and blow everything up, and now I'm for real out of the markets forever, or I continue to take baby steps. So when I went from the simulator to real account, I literally traded with one dang share, one share every day. And I did that for like 3 or 4 more months because, again, I didn't care about making money still. I just cared about being consistent. The money was going to come after I became consistent. That's one of the blessings in the market. Like if you can make $100 a day, you can scale almost that to make 10,000 a day. I tell a lot of my followers that it is harder to make like $100,000 in one day than to make $1 a day for 5 years straight or something like that. So the consistency was the trick and the hardest part about becoming a profitable trader. So that's what I always had in mind. So I went ahead and started trading with one freaking share. Of course, my P&Ls were swinging cents, right? At the end of a month, I would be up $4 or $5 or down $1, right? Which to most people looking at what I was doing, I was insane. Like, what are you doing wasting your time? Mind you, I was putting countless hours per day trading, learning how to trade, doing all this research about stocks, reading books about trading, learning about strategy every day just to be up cents. I remember this conversation very clearly with my dad when I was telling him, like, Dad, I just had my first profitable month. I made like $7. And to him was like, son, we need to have a very serious conversation. I think you're wasting your life. What are you doing here? Like, you finish your education, focus on that, get a nice job, and then live your Canadian dream or whatever it was. But again, they didn't understand the trick in the market was consistency. Anyways, had 3 months of up $9, then up $13 the next month, and then up $33 the month after. And then I was like, all right, 6 months of profitability in the simulator, 3 more months with this micro share size. I think I got it. Now that the last demon that is left to defeat is my emotions after me increasing the risk and after me starting to trade with some real share size. So what I did was a little crazy, but it worked out. I increased my share size by 3 zeros. So I went from 1 share to 1,000 shares. And I knew that was very risky, but I had a plan in which if it didn't work for the first 2 weeks, I was going to go back to a share and try to figure out what went wrong. So I already had some experience trading with 1,000 shares when I went ahead and blew that account offshore at the very beginning of my journey. So because I already had traded with bigger share size, I already knew how losing felt. I already knew how the P&L swings felt. So I wasn't coming in from scratch trading with bigger share size because again, if I was trying to grow that $3,000 account into $1 million, I was swinging like a maniac. Thousands of shares. As a beginner trader, it's the worst recipe for disaster. So I kind of knew how it felt trading with bigger share size. So anyways, go ahead, I add the extra zeros. And then I meditate before trading the day after, and I tell myself, just do exactly what you've been doing. And then at the end of the day, let's study up what happened. So I did. And then my first day made like $147, which would have been like $1.40 with my 1 share. But this time around, it was 140. And then the day after, $300, and then the day after, 600. And then I couldn't believe it. Like, the euphoria I felt on those few days has been beyond of what I felt on my bigger green days now that I've made. My biggest green day is $41,000 and it's there on Kinfo. There's no comparison of me going from $1 a day to 100 or to 1,000. I thought my first $1,000 day was insane. And then from there, I just kept on doing that, growing as a trader, then adding zeros to the share size. And now, I'm blessed on that whatever I'm doing is still working.
I just want to take you back a little bit. So, for example, Warrior Trading, who we want him on Kinfo, by the way. So if Warrior Trading can ever come off Kinfo, we'll be glad of the day. But just for his education, did you pick anything up on it? Was there any valuable insights, or did you go your own direction? Like, what clicked for you to start making these dollars?
So Warrior Trading, my experience there was helpful. I would say I don't reviews on his course, and I would recommend it. He, at the very least, as you're saying, even though he's not on Kinfo, I would say he's one of the ones that is actually making money instead of just being a fake scammer selling courses like everybody else. So I think his material is valuable, and I learned the basics of small cap stocks, the basics of level 2, how to find stocks to trade. That's the way I would recommend his material, as learning the basics instead of trying to piecemeal what small caps are on the free internet. This is kind of like a structured, plattered way of learning that. But that's about it. In terms of finding your own edge, the way he traded didn't really work for me, other than learning the basics. He's just way too experienced to try to learn from him, at least now. He is extremely good trading breaking news, extremely good at reading the tape. And, I just couldn't keep up, right? So I started trading like he was. It didn't work. At the very least, I did become a break-even trader, which is a huge milestone, becoming a break-even trader. At the very least, you're showing up, taking trades, and not losing. So that's a milestone in itself. But the breaking news stuff, the pre-market price action and volume he likes trading in, just never really worked for me. But then I learned enough skills so that I could develop this hyper-scalper, kind of like market maker type trading. Because funny enough, after I learned from Ricky and from Warrior Trading, I saw within my metrics that I was green like 90% of the time after pressing the buy button. And the problem was that I was taught to hold for the entire reversal, to set daily targets and hold until those targets, to set profit targets of 10, 30, 20 cents per day and hold until those targets. And 100% of the time, if not more, those winning trades were turning into losing trades because I was taught to hold and then like to add into winners and to like, look at other indicators so that I can make my winners bigger. And when I discovered that in my metrics, that was my turning point, knowing that I had all these small winners that I never took off the table because I thought they were insignificant because they were only like a few cents per share. And, I was holding for the bull flag to resolve, or I was holding for the wedge to break out, or I was holding and waiting for the high day breakout, or whatever it was. That never worked. But what did work was the initial kind of like anticipation of those setups. So I realized that I was making 3 to 4 cents every time I bought, but then it was, of course, reversing and turning into red trades, all of them keeping me a losing trader. When I realized that, I told myself, what if I just start selling this thing instantly? And, that's what I started doing in the simulator, and it started working. And that's when I turned the corner in the simulator, was becoming a market maker. It's like, I don't care what the stock is doing or headed. I'm just going to get in and out in this quick volatility and try to capture 4 cents, 5 cents each time. And then with enough big share size and free commissions at the time, that's how I started making money.
Yeah, but like it's crazy because like normally people would say, hold on to your winners, cut your losses quickly. You've got to hold on to the winner. But that's the worst advice ever for you, because you need to get rid of your winner. So when did you, like, I understand that it clicked, but like, what are you doing? And I know we'll get into it in a bit, but what are you doing to like get in instantly up? Because most people get in the down from the spread, right? So what are you doing to get in and be up?
So I would typically buy when the tape is green. So I'm buying as the stock is reversing. I'm buying as the stock is already bouncing. I'm buying as the breakout is about to happen. So instead of trying to accumulate share size and being patient and waiting for the pattern to see resolution, I'm trying to find that apex moment in which pullback goes from pullback to bouncing, or breakout goes from consolidating to breaking out. That microsecond from sell-off to turning point, that's what I try to capture. And if I'm accurate on it, I can catch the entire resolution everybody else has been being patient for, but I catch it right away. On the downside, if I'm wrong, then, I can get chopped out most of the time because I'm trying to be as perfect as possible rather than to be patient and accumulating shares and having like a broader stop. So the downside is my accuracy is not as good, but on the upside, when I do catch it, is that I can have some great winners, and then I'm following a breakout or bailout approach, which means since I'm buying upticks, right, and I'm buying breakouts, there's no stop loss under VWAP or under the pullback or under anywhere. the stop loss is the second it's not going, I am out. Literally, the second it's not going, I am out. And again, a huge part of why I like free commissions, because, I was never committed to any specific trade ever. It was like, if I instantly buy it and it doesn't bounce or it goes as I'm seeing green on the tape, then I'm instantly out. And it turns out being like insignificant losses. And then I do catch that one trade that is the apex turn from that pullback, from pulling back to bouncing, and it just wipes like 4 of my losers, and now I'm in the green, right? And as your accuracy gets better, it turned out to be a very bulletproof strategy.
So like, are you like a master tape reader? Like, are you like a master of apex moments?
I would say so. Like, I really can't trade without the chart almost. Like, to me, 95% of the time trading is just staring at the level 2 like a hawk. And I can almost imagine what the chart is doing. Another way some of my trading friends have done it is with like 1 second charts. So essentially a 1 second chart becomes what the level 2 is telling you because it's so quickly. But a lot of people are stuck with 1 minute charts, 5 minute charts. To me, those are like way too delayed. They're like almost delayed indicators, because the chart is kind of like looking in your rear view mirror. Everything the chart is painting is kind of like the past because it has happened. But the level 2 is kind of like your front mirror, and is like the path ahead, right? And I try to anticipate what's going to happen next, and I quickly buy, and if it goes, good, and if it doesn't, I'm out, right?
Yeah, but what I like about your trade, and tell me if I'm wrong here, but you get a lot of stuffs in the market, but like the stuffs almost don't bother you because you just need it to at least even just trying stuff. And if the effort's there, are you in and out before the stuff even goes wrong? Is it kind of like that? You just need the drive. You need the drive.
Exactly. You hit it on the nail. That's how it is.
No, it's absolutely beautiful, but it's a total skill. Are you recording screen recording tape to narrow down on this, or is it just like a natural ability of so much simulator time?
There's no natural ability here. Everything was built from zero, and you hit it in the nail again. Every single day without fault, you must record your screen so you can review the tape. You can review the color on the tape, what it meant, and how the level 2 reacted. You can review how a big bid or a big ask affects the level 2. You need to review even the different levels of the market depth. What does it matter when the levels are stacked? What does it mean when the levels are thinning out? Everything matters, and everything is 100% learned. I'm teaching my brother how to trade now, right? And when he starts at the level 2, to him is like reading Chinese. Like, what the hell is going on? Like, nothing makes sense ever. And I was the exact same. I remember when I was in warrior trading back in the day. This was a few years ago, when Ross wasn't like making 100,000 a day. He was just making maybe 1,000 a day. To me, the level 2 looked like this insane tool that never made sense. But if you stare at it for 3 years, 10 hours a day, everything makes sense. And I genuinely believe, like, if you put in the hard work, you're gonna like become a level 2 master as well.
It's so beautiful that, but like it can I just understand, like, is there anything in the level 2 other than the order sizes, where the order sizes are, and how fast the level 2 goes up and down and the volatility of it? Is there anything else other than that I'm missing?
If you stare at the tape close enough, one of the prints is gonna say buy now. When if it's buy now, then you buy. I'm joking. No. That's a good point. And there's something that I should bring up. Level 2 is noise 90% of the time. So you need to be able to know when to read it. So that's when the context actually plays a role. Having a stock with breaking news, having a stock that has a lot of attention and high relative volume. You want to be trading something everybody's staring at, because if nobody's staring at the level 2 when you are, whenever you see these level 2 signals, no one will react to them. So they become worthless. So you need to be trading something with high relative volume, with news, and within some sort of chart context, chart pattern context. And when the apex point that I was telling you about is getting closer and closer, that's when I zone into the level 2. And that's when the signals actually mean something. The green on the tape actually means something. Usually, like, the stock is going to spike up even for a few cents. With red on the tape actually means something. A big bid actually means something. A big seller actually means something. When everybody is staring at it, and when the apex moment is about to come, level two signals are actually readable and they actually mean something. And I, take trades against those all the time. But then again, it's all like an infinite game of rock, paper, scissors. So, there's like the textbook definition of what things mean. For example, a big bid means the stock is going to go up. A big ask, it means there's resistance. The stock is about to drop. On paper, right? That's what it means on paper. The same for the time in sales. The green on the tape means people are buying at the ask, so the stock should be going up. Red on the tape usually means people are selling at the bid, the stock should come down. So this is what the textbook definitions are. But if you know that trading is an infinite game of rock, paper, scissors, trying to think what the other guy is thinking, so then think, okay, if he's going to pull rock, I'm going to pull paper, and then he's thinking, if he's thinking I'm pulling rock, and then he's going to pull paper, I'm going to pull scissors, right? So you're trying to predict several layers of what do you think people are going to do while staring at the level 2 after seeing this textbook signal. And, you sometimes almost do the opposite of what the level 2 is telling you, and it works, right? But that's the whole idea behind level 2. You are finally playing against humans. That is the little portion in the entire chart, that apex moment where humans are reacting to the level 2, and winning a battle against humans feels so much easier than trying to play chess against an algorithm or against a computer. And in that little apex moment, I feel like the signals in the level 2, whether they are textbooks or this kind of like rock paper scissors version of it, you can make money out of those mini moves, mini signals. So that's what I've been doing.
Yeah, that makes a huge amount of sense. I think we're good now. I mean, first of all, I just want to say, let's bring up your profit chart and let's look at your last 3 years. While you do that screen share, I just want to say if anyone's got any comments specifically for MightyStocks, because we always get a ton of comments all the time on the episodes. So if anyone's got a comment for MightyStocks, just drop it in the comments. And what we'll do is I'll ask you the questions separately. I'll get you to answer them on all consolidated, and we'll drop it like on a Kinfo thread about you. So drop your comments in the episode. And guys, if you want to see more people like MightyStocks on this podcast, just hit like and hit subscribe. It helps the community, helps get more people get verified. Might get Warrior Trading verified on here one day if we look.
I'll send an email. You're gonna get them here.
When you're ready to throw up that profit chart, let's take a look. Okay, so we're looking at 0 to 1.5 million. Talk me through it. I can.
All right,
so start.
Yeah, so initially, as you can see here, when I first funded my $25,000 account, I was trading with marginal share size. So my P&L swings were dozens of dollars. And of course, as a beginner trader, I was terrified about losing $1. So this to me had the emotions of like if a millionaire was trading with thousands of shares, which is exactly what I wanted. I wanted to feel like if it was real. So all throughout this zone in 2022, I'm still following process over profits mindset, trading with 1 to 10 shares, which is why my account wasn't growing exponentially. I think here at the beginning of 2022 is when I made the switch. As you can see, I added an extra 0 to my share size, and then I continue to replicate what I had been doing in the simulator. And then that's when life got crazy. And I just kept on doing exactly what I had learned, and now it just worked with an extra 3 zeros. That's when I started building the account. And then eventually I added another 0 to that. That maybe somewhere in here when I added the extra 0, and my equity curve started growing more exponentially rather than up until this point, it was more of a grind. Here I added an extra 0, and now my profits have been growing way more. I had my best year last year. I was shy of $1 million on just 2024, which is insane.
$1 million in a year. How old are you? 26.
Yeah.
$1 million. Yeah. You made $1 million in a year and you're 26 years old.
It is insane. It is insane, but to be honest, it is exactly how my vision said it. That's just something I like preaching is have a delusional vision, believe you can achieve it, and someday that daydream will actually become true. We have to believe it. And like I told you earlier, there was no quitting in me. it was either this or I was gonna die trying. And you know what? I didn't die, so the outcome is the inverse, which is this.
Yeah, but these things are possible for those who are willing to commit and put the time in. And I'm sure you spent 8 hours in a simulator or 10 hours in a simulator for a couple of years. Like, I'm sure you put the time in, because that's in
Yeah.
the time up before and after. But I mean,
Of course.
how I saw on an Instagram that you took a I think it was $66,000 loss. No, you were on a drawdown of $66,000, but you went on to make 100K. I guess that's obviously not scalping. How
Right.
do you so the really good thing about this is you never have to worry about how to handle being down in the current strategy of scalping. You don't have to worry about it because it doesn't work straight away, you're out, right? It doesn't work in 2 seconds, you're out.
Right.
How do you fight against that thing in your head where you're like, I just want to give it 2 more seconds. I just want to give it 3 more seconds. It's dropped, but it may come back. How do you fight against that? A lot of people struggle with it.
Well, it becomes second nature, because finding an edge in the market is so tough that whenever you find a little strategy, a little pattern, a little level 2 signal that is working, you almost have to treat it as religion. And even if sometimes there's a little devil in your shoulder telling you to hold it a little longer, or average down, or maybe hold your winner for the bigger move, it just never pays out. That's one of the things in the market, is like, it will correct you if you let it. And I've done that, of course, many times, trying to average down or hold for a winner a little longer, and it almost never works. It almost never works. And what I like about this strategy is that since I'm capitalizing off of such small moves, right, 4 or 5 cents per trade, for me to make big money, I have to trade with thousands of shares, 10, 15, 20,000 share positions. And, if I hold one of those for too long and I'm wrong, I can lose thousands of dollars in one trade. So the market has been very educational for me in that sense, that thankfully, every time I've broken the rules, I've gone, pinched, and I've seen bigger losses. It gets tricky when you break the rules and you get rewarded. That's when you get into this vicious cycle of every now and then breaking the rules work. So it convinces you to always do it. But for me, and especially the type of strategy, I always got like negative reinforcement, which was break the rules, pay the price all the time. So to me, it was like that.
And then on the opposite side of things, like you do a bit of swing trading, right? So say you swing Tesla. How when you're down 66 grand, do you just think, I'm just gonna hold it? Like, how do you have the conviction that you're right?
Well, I like my swing trading is completely different, but I like thinking of my swing trades as quantum trades. And what I mean by that is, how when you don't need money, trading is easy. You know how there's multimillionaires out there that whenever the market drops, whenever a big blue chip company drops, they just toss a few $1,000,000 to the stock, and it will of course turn around and double their money and triple their money. And that's because they're trading out of a fearless, almost careless mindset. So what I like to think of myself is, whenever Tesla was tanking, it was dropping to like $200 per share. Of course, it looked like the sky was falling. All the media outlets were saying that Elon Musk was doomed. Tesla was going to zero. It was an overpriced company since inception. And, it looked like the sky was falling. And of course, I was terrified to put my hard-earned money into it. But then I started thinking about these millionaires and these other people that have a fearless, careless mentality. How are they throwing millions of dollars into the trade, into the stock, and maybe not even caring about the fundamentals, the financials, maybe not even looking at the charges, thinking like, yeah, it always works because we don't care. So you throw $1 million on it. It of course is going to reverse eventually, and then you just double your money. So then I call it a quantum trade, because I almost put myself mentally in their shoes and be like, all right, if I take this trade as a fearful trader, $66,000 drawdown will come. I will sell down there, and then I'm done, out of the markets, out of the game forever. But if I adopt their delusional mindset, and this is of course not financial advice, this is how you blow your account. But if I adopt their mindset and act like if I didn't care, and act like if I had millions and millions of dollars even if I lost it all here right now, it will work. And of course it does all the time. So I adopt the delusional mindset of the multimillionaire guys. I just know that it's a good company. It's extremely oversold. The sky is falling. That's probably the best time to buy, when it looks the worst. And when your coworkers are starting to tell you that it looks bad, that is the time to buy, because that means that fear is to the max. All right. So then I just take the quantum trade. I throw money at it. And when it starts dropping, it's like, what would a millionaire fearless guy do? Buy more, maybe. And then I didn't buy more, but I just held. And of course it turned around. I just taking so many little trades like that, and they always work. And even though I'm not at a place in which I can afford, $1 million loss that would put me back to zero in my trading career, I've concluded that winners in the mindset are the ones that are not victim to emotions. So I just treat them like that. It's like, whatever.
Yeah, I can tell you a funny story. You'll know when the Trump tariffs first came out and the stock market crashed on the tariffs and the uncertainty.
Right.
And that was similar time when Tesla went down to 220 and Elon Musk went against Donald Trump and stuff like that. The market fell like 20%, right? I was getting married in 6 months' time, and I thought, I'm gonna put all the money for the wedding and all of the other money that I've got saved into this dip. And I'll bet that America's economy isn't going to crash,
Right.
and that eventually, one way or the other, these Trump tariffs will resolve, and the market will go back up to new highs, because I bet that the American economy is not going to completely collapse, fail, and go bust on this.
Right.
And if it does, I'm happy to go bust too. I'll go bust if America goes bust, but America's not going bust. And
If America goes bust, the world is a zombie apocalypse, so it doesn't matter.
Exactly. If America goes bust, the world's over. So I paid finally me full wedding on the profits for that from that trade. So like that's sometimes the mindset. Yeah, no, I took the trade and I made about just a little short of 20 grand. So I paid for half my wedding.
That's amazing. That's a great story.
It was a crazy win, crazy win just buying the dips on that. But let's get into the I'm looking forward to getting into the nitty gritty of your strategy.
Oh yeah.
This long dip and rip. Let's see how this is working. Is this a video recording, is it?
It's a recording, yeah.
This is the first ever video recording tutorial tuition we've ever had, so there you go.
Oh really?
Yeah, so this is gonna do well, I'm sure.
People are doing it wrong. That's what I'm saying. You got to study like a maniac every day. You have to record your screen. Like there's a lot of people that have been trading for years and they don't even know how to record a screen. Like, what are you doing?
This is the first on the pod. This is the first video screen recording shown from someone on a pod. So try to talk me through this.
All right. So just to get a little oriented here. So I'm trading two stocks, right? This is stock number 1. Oops. And this is stock number 2. This is the 1 minute chart. And this is the level 2 for that 1 minute chart. All right. That's all you really need to know. And then here is the broker where I send orders.
Yeah.
So, the strategy is like any other mock-up strategy, pretty much. I am looking for, I'm sitting down, scouring the entire market with my scanners and looking for the leading gappers. I'm looking for the trade here. Hold on.
That's it. So you've got some scanners that say 30% up, 100,000 pre-market volume, and you're just seeing what's up, basically. It's like an easy basic scanner.
Right, like a normal gap scanner. And I'm filtering for volume, I'm filtering for biggest gain, and then I'm filtering for breaking news. I do like trading something with news, because at the very least there has to be some fundamental reason for the stock moving higher. Even if the move is exaggerated, sometimes we have the most ridiculous headlines, like the CEO of this company took a healthy crap, and then the stock is up 1,000%. But at the very least, there's news. And then why do I care about news? Is because since I'm buying thousands of shares and I'm typically buying high and selling higher, I can't accept the risk of a T12 halt or like a T11 halt. And that means the stock has no reason or business being up this much. It gets halted by the exchange. They reach out to the company asking, what the hell? They say, we don't know either. And then the stock resumes months later. So your capital is frozen for months. But not only that, it resumes back to where it came from, back to being just up $1 or up $2, right? And you bought the stock at 10. Huge losses. I've had so many friends get caught on those that to me, is a golden rule that the stock has to have news. Anyways.
Can I just ask it? Is there any type of news? Like, are you looking like a biotech with cancer news, or an earnings winner, or like, are you looking for the contract wins, or any specifics, or?
No, not really, because all news are fake anyways. They're just a headline to have the stock flying, so it doesn't really matter. So as long as there's a headline, sometimes there's genuine headlines. Like, for example, when a lot of small cap companies were finding the vaccines for COVID, or when they're partnering it up with huge companies like Nvidia or Walmart. Those are fundamentals that I actually think are relevant and may actually be commensurate for bigger risk and for bigger share size. But most of the time, the headlines are just, fluff to get the stock up. So as long as there's a headline, I like it. And then from there, I'm looking for the top 3 leading gappers. Why the top 3? Because they're going to have the most volume. And if they are going to have the most volume, they're going to have the most retail traders looking at it. And the more retail traders we have looking at the same stock, in my opinion, the better quality the signals in the level 2. Like I told you earlier, 99% of my trades are based off of the level 2. If I'm trading a no name, no volume stock, you can literally see the same level 2 price action and the same signals on any stock if you wanted, but they mean nothing outside of context. If nobody else is looking at them, they mean nothing, right? You can see the biggest bid in the world and then green on the tape, the stock can teleport to 0 instantly. It doesn't matter if you're outside of context. But once you're in context of breaking news, leading gapper, everybody's looking at them, the signals actually start to mean something. And then from there, I like trading stocks that are halted, right? This is the dip and rip trade per se. Why do I like trading stocks that are halted? Because of the battle that is constantly happening between longs and shorts. So the small caps is kind of like this playing field in which short sellers and long bias traders go at it, and they try to see who is right? At the end of the day, we are trading very, very cheap companies that 99% of the time eventually fade. And there's very popular strategies of shorting those pops and shorting those spikes, right? So we usually have small caps always be fueled with short sellers. And for you to make money in the markets, you have to understand that the market is a zero-sum game, which means somebody has to lose for you to make money, right? Money is not printed from thin air. It's just transferring from one account to another. And where I found that was when short sellers stopped out. When short sellers were forced to cover, for me, there's a small window there for me to try to jump in and capture, my little move, my little scalp, my little micro scalp. Is when they're stopping out, right? Somebody's losing. Short sellers are getting squeezed. Longs are hopefully catching the other side of that trade and making money. So halts to me scream, this is an issue if you are short. If you are short at $5 and then you add it here, let's say for the lower high, and then you're looking for this thing to trickle down to 0 because 99% of them will do that eventually, right? So I'm confident that there's short sellers in here. Or what happens when you're expecting a fade and all of a sudden there's a massive engulfing green candle with high volume looking you dead in the eye like, we're coming for your stop loss, right? Most short sellers that are seeing this hold are crapping themselves and thinking, maybe this is the 1% of the time that the stock actually holds up and goes to $100. So I better get out of this thing now, right? So when it's halted up, people, especially short sellers, meditate like, I'm going to get out of this hold and I need to get out of this trade right now, which means when the stock resumes, we're going to see a huge influx in buying as short sellers are like throwing in the towel, giving up. I need to cover this. Covering means buying volume. And I just see a lot of imbalance to the buy side after a stock is halted up like this. And that's where I like to buy the stock and try to ride a little short covering we will see from the short sellers. Anyways, so stocks halted up usually holds come and go in 5-minute intervals, which means you got to go time and sales, check the time that it got halted at 10:21, and then you add 5 minutes to that, which means the stock will potentially resume the next 5-minute interval 10:26. in 12 seconds, right? So what I'm doing there is, just waiting for the 5 minutes to come, trading something else if it looks good. And here we go. So right now I'm looking at the clock, waiting for that resumption. It's coming here in 4 seconds. All right. So then now my heart is pumping. It's in my throat. I'm feeling it, and I'm ready to throw shares at it.
Do you still feel it now? Do you still feel nervous before your trades? A little bit.
Not as much as I did, but still, the heart rate definitely goes up. All right. So it resumes, right? It resumes at a price of around 519 by 530. As you can see, my mouse is clicked right here because I'm about to execute on my broker. I'm about to send an order here because I have an order ready for 5,600 shares. And this is my P&L so far right now. So I'm up on the stock 3,371. Anyway, so it resumes and I instantly buy. Again, this is not financial advice. Like everything I said in this video, like if you try to do this tomorrow and be a hero, you're going to lose it all. You still have to learn, follow the process over profit mindset, all that. But anyways, it resumes and I send my order, right? 5,600 shares. The price is dipping now at 505. And Schwab is a little laggy. So the order is still populating like that, but I'm already long down here. Even on the order, it looks like I'm still getting filled. On the back end, I'm already long. So as you can see down here, I am long 5,600 shares at a price of 529, right? And what am I looking at? I'm looking for short sellers to cover through this level. Most beginner short sellers have their stop loss at high of day. Just like how you would trade this kind of reversal, right? If you're long bias trader and you're trading a reversal, where's your stop? At the bottom of it, right? So this is the same stuff, but inversed. Short sellers have their stop at high day. And what do I want to see? A massive short seller cover. And usually it looks like that, right? This stock just a massive blowout candle as you're seeing short covering through high of day, through this little pivot. There's a lot of, cover orders here for them to like bail out. And we see that massive candle. And then check that out, made like $5,000 on that second. And like I said, it's like, sometimes I can catch the perfect apex moment in which we see the massive follow through of a setup that really and truly has been brewing for like an hour. And that's the whole idea. And then the stock is halted up again. I might repeat this trade after this halt. I don't quite remember. But typically the first halt is the one I like the most because after a few halts going up, now it's extended again and short sellers are going to go from, all right, now we're going to hammer it back in. And we start seeing those massive jackknives, the flushes and all that. So it's a dance between shorts and longs for sure.
So you're just looking for high volume, low floats. And you don't even need to pay attention to this, right? Like do you have like an indicator or something that says something's halted? Because you don't even need to watch this. You just need to be like, if it halts, I'll look at it.
Right. I have it on my scanners. I have a halt scanner, right? So it's a scanner that is telling me all the stocks that are halted, either up or down. And then I pull it up, and if I like it, I take the trade. And if I don't, I don't. But something I will say though, trading around halts is trading around extreme volatility. If this is a setup that really took me a while to master, because you can very well be victim of this volatility. Like if you're a second late, imagine that. You're a second too late, you're buying at 623, this jackknives back to 5, and you just lost $1.20 instantly. So it's a high risk, high reward type of area. But once you become, good at it and proven that you can trade it, it's made me a lot of money throughout the years.
Are you hitting markets? You hitting market orders on these?
On this one, I did, yeah. I did.
You're hitting markets because it's load of volume, tight spread. Doesn't really matter. You just want to get in.
And I needed the speed.
Yeah, and is there anything other than like, because it like when the halt opens, can it not just wash out? Like a lot of halts wash out, right? What if there's dilution and it just dumps?
Right, and that's part of the risk. Like the idea is that the chart is painting in a story in which I think short sellers are in trouble. That's the big idea, because you're right. There's going to be instances in which stocks will be halted up and they're instantly going to reverse into a halt down. That usually happens on, not the leading gappers, not the high relative volume stocks, and the stocks that don't have a lot of shorts piled into them. But the stocks that I feel like, are the leading gappers and have made new highs already, those are the ones that start getting accumulated with short sellers. And the chart has to look something like this. This stock should have faded, is making higher lows, is downtrending, and everybody and their mothers is expecting a fade. The mere fact that what they expected is not happening, that's what kind of makes the trading outside of that halt valid, is that the trade idea of all of these shorts is clearly not happening. So that to me gives me the green light of, all right, this halt is valid because everybody that was wrong here will need to cover. So typically trading around halts for me comes after big consolidations like that. A big period in the chart in which shorts are soaking and are accumulating because you need shorts to be in it because they themselves will be the fuel of the continued surge after the halt resumes. So that's a good point. I do like trading around halts after I have some sort of sense that this is, oozing with shorts.
Yeah, that reversal it didn't come out of nowhere because it broke out of the downtrend line, right? But it was like, I wonder, is this shorts on top of each other, or is this market makers putting it 1 cent through the low and ripping it back up? Do you have an opinion on it?
I think they're both of them. I think market makers always have an agenda. They probably already knew they wanted to send the stock higher, and maybe they are the ones themselves painting this wedge and making it fail, accumulating millions of shares into this zone, right? And then, they tie up the supply because they have infinite money and they can do whatever they want. They tie up the supply, and then just a little burst of buying, once they've accumulated all the shares in the float, just a little burst of buying can send the stock flying like this, right? And, I would expect that after this stock resumes, they would just start liquidating everything that they accumulated down here. That's another style of trading that I never got good at, was trying to follow market makers like if you were a little fish. I ended up being a victim to them throughout these zones because they're experts at like washing shares and like stopping people out and all that. I always got chopped out myself throughout those zones. So I like to be on the open follow through side of market makers changing moves. But it is a combination of everything, I think. Short sales covering, market makers giving resolution after this stop hunt, market makers themselves pulling their orders out of the way so that they can send the stock flying. And that's the whole idea people don't get about trying to become a profitable trader. It's never about indicators or golden strategies. It's not even ever about charts. It's about understanding the parties behind the stock, understanding the agenda of the stock, right? A lot of people get caught on learning candles, and you can learn that for infinity and never become profitable. But until you understand the players behind the stock, that's when you can finally find an edge. So you're right. Everybody's involved here.
Yeah, and like, look, you are not going to be the market makers. Like, no one's going to be the market makers, right? But you're just taking that 1, 2, 3 seconds where you're thinking shorts are going to cover in this moment. I'm going to scalp it. And it's, for you, the worse the stock, the better the long, right? The worse the stock is, the better the long.
When it flips like this, exactly. Because the worse it is, the more confident shorts are that it will fail. And when that does not happen, the bigger the reaction when they cover.
So you love to go long terrible stocks and you make millions of dollars doing it, basically.
Yeah, I would say so. At the end of the day, like I was telling you, 9 out of 10 people fail, right? Most people fail trading in the market, which means you have to be on the opposite side of those traders. And to me, short selling has become this massive popular strategy that everybody does in small caps. And I'm thinking to myself, if 9 out of 10 people fail, I'm gonna try to be the small fish on the other side of those failing traders, which are usually beginner short sellers with way too much share size, short sellers getting squeezed. And I try to scalp whenever they're wrong. I try to scalp like they're covering pretty much.
Yeah, I think what I really loved about this episode is that we've just not showed 7 charts. We've gone 1 chart, 20 minutes on it, like hyper analyzed it. I think that gives great detail. Just 2 questions to close out. One, what's going on with Schwab? It kicked people out, and what's going on with the scalpers now?
Well, like you said, market makers never lose, right? And I think a lot of people were taking advantage of free commissions and also exploiting market orders. And Schwab was not Schwab. The market makers weren't liking that. It got to a point in which profitable scalpers were making money out of these free commission brokers, in which you are meant to always lose money because the brokers sell your order flow to the market makers, and then so that they can like wreck you and trade against you and make you as poor as possible. Like the whole entire stock market is a crazy scam, honestly. That's why I call my community Merciless Markets, is because the markets are brutal. They're here to take all your money, suck you dry and then throw you out in the street. Anyways, a lot of people abusing free commissions and market orders, especially in high volume. It got to a point that market makers consider that toxic flow, which means traders are making money off us instead of us making money off them. That can never happen. And they started banning people. Like pretty much, if you were a profitable trader in Charles Schwab, you were booted.
I see. And you just mentioned your community. What's your community name? There's a link in the description. We'll put it in. If anyone wants to sign up and anyone's like inspired by what Marcelo's done, how can people find you?
It's called Merciless Markets. Again, the whole name inspired by, us trying to find a little profit in this arena that is completely rigged against you. And that's it, right? We do live streams, we have chat rooms, we have our education, all that.
No, I think obviously like you made $1.5 million if you live share them. If any of your like sessions are basically what you've just done for us today, it's an incredible, valuable learning experience. It's not a come in the room with 700 students and just watch these videos. Do you know what I mean? It's not like that.
Yeah.
People can find you below, and I think there's no better verification out there than Kinfo right now for teachers to separate the real from the furus, and it's up there and verified 1.5 million. So if people want to learn more about you, they can. But if you've got any basic advice, just to summarize, any golden nuggets to close out on, we've gone over an hour. What would they be to finish it out?
I would say, live with a mindset of delayed gratification, process over profits. Nothing meaningful in this life will come easy. You will not get rich quick. You're not going to become a millionaire in a few months. It's going to take time, 2 to 3 years of a lot of hard work and not seeing a penny back. Once you turn the corner, all the reward is going to come at the end all at once. But while you survive the learning curve, just keep walking. Even if you don't see light at the end of the tunnel, it's a steep learning curve. But I genuinely believe if you give it your all, I've seen a lot of successful students make it. So trade in a simulator, take it one step at a time. Don't burn yourself out of the game taking one stupid trade. Just take it slow, right? Take it slow, put time and effort, and I think you have a good chance of making it.
Thank you.
All right, man.